Disney shares are falling after hours. The company missing on revenue and subscriber growth, coming in lower than expectations. The earnings call just moments away. Joining us now to talk about the report is Heather Musnick of Musnick Media Consulting. She's also the former senior vice president of content partnerships at Hulu. It's good to have you on, Heather. That number was a miss, 103.6 million Disney Plus paid subscribers. Do you think they're vulnerable to the same kind of phenomenon that affected Netflix, which is this during the pandemic? It pulled forward so much demand.
Yeah, I think that is part of what's going on. And I think part of what is happening today, they so overshot their expectations in terms of what their performance was, performing 5 years worth of growth in the first year, that it is a little bit of pull forward and a little bit of the success with pent-up demand and with coming out of the gate with a great product. But I wouldn't take this as any long-term signal that Disney Plus and Disney streaming services more broadly is slowing down in terms of their ability to acquire new subs and to retain them. They are for sure going to have to start to switch from just an acquisition game, which is what they've been playing for the last year and a half since launch, to more of a balance between acquisition and retention game. And that is a new muscle that they need to learn that Netflix has a lot of history on. So it is it's something that we can continue to watch, but I don't think that it's really a very big signal that this is a major slip.
Let's bring in Ivan Feinseth into this conversation from Tigress Financial. Covers the company, has a buy rating on the stock, $220 price target. Ivan, anything that changes your view here on Disney? It was a revenue miss and a sub miss, but there was some strength under there as well, and it's a lot of optimism around the reopening in the parks.
Absolutely. You never want to see misses on, especially a key metrics in the situation like subscribers. But, there's so many things that are going on that will help Disney. And you got the parks reopening, you have theaters reopening, studio reopening, and the halo effect that the company has from their content to drive park visits, merchandise sales. So I think that this pullback is a buying opportunity. They did well. They survived well during the pandemic, and they will do exceptionally well in a post-pandemic environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.